Hey, welcome everybody. How are you doing? And good to be with you. Good to be with you. To be with you is good. So payrolls day today. A number is a coming. A number is a coming. I call it fake number day for the facts that it is lies, damn lies, and statistics. But I actually anticipate that there'll be a little bit more reality check in this one. US had a negative quarter. That's right. US had a negative quarter. So if we have a look at the payrolls expectations for today, expectations forecast 138,000 new jobs. Previous was 228. So that would be 90,000 less than the previous month. Average hourly earnings continues to be around the 0.3% increase, which would mean that everybody's getting 3.6% annualized. Unemployment rate is expected to stay the same at 4.2%. Well, I don't know. I'm going to keep going unders every time. I'm going to go unders on the number. I'm going to go overs on the unemployment rate and unders on the hourly earnings. That's just how I see it. But good to be with you. Thank you for jumping on and hitting the like button. 55 of you already, 11 likes already. Thank you to those 11 people especially. So it's a stats day that is coming in. So you can expect it to be potentially volatile in the markets in a number of ways. We've seen oil. What's up, Slick Willie? It's been sliding away. Who told you? Who told you that? Who said that? Who said that? Name the man who said it. That's right. We've been warning for a long time, actually. In fact, we were kind of almost too early to brag too much. It ended up got held up a while, and that was kind of choppy for a bit. But the trade was, in fact, gold long, short oil. And the reason why we give you trades like this. Morning, tell us where you're checking in from, by the way. I am in semi-sunny Georgia. I got Georgia on my mind. That's right, semi-sunny. I shouldn't say semi-sunny and then zip up the cardigan at the same time, should I? But yeah, no, it's nice out here. Where are you guys? Morning from Liverpool. The Red Men are champions. Yes, morning to Liverpool. Bulgaria. Yeah, nice to have Eastern Europe. Of course, we're on the Georgian time. So over here, it's around just before 12 o'clock. Georgian time, and you find people, it'll be mostly Europe, I would imagine. Americans will check in later when they get out of their lazy ass beds. Come on, you Americans, get out of your lazy ass bed. It's probably still 5 a.m. for the poor guys. But yeah, good to have you all. Bavaria, Morocco, Tbilisi is where I'm at. Yes. New Zealand, of course. Let's go late in the day now for Kiwis. Soon to be a member. We look forward inviting you and welcoming you, Miroslav. Yes, well done, and book that call. 98 of you on. So numbers are coming in, and it's going to make for a choppy day. Oil down. So you might remember we gave the trade as go 100 grand long, simulate. We don't recommend anything, by the way. So we're just talking about what the kind of stupid things we do, us HVF method guys. The stupid things we do, and one of the stupid things was go long gold, short oil. And the way that works is when you have the events that we had with the tariff tantrum, oil is kind of chopping around, not actually going so great on the short side, slipped a little bit and gave you a little bit of the profits, but you're killing it on the gold long. Remember that gold call came in at 2011. Once, twice, 3 times a lady. You break on the 4th. You remember that on the chart? That was November 24, was it? Feels like a long time ago. Or was it November 24? Actually, no, it was the year before that, 23. I'm getting totally confused. I have to check the charts now. And you make the money on the gold long side, and then gold has a little bit of a pullback now. It's had a really big surge, bit of a pullback now. There were small inverted HVFs on low time frames. And what's happening is the oil spills. So actually the gold oil, when you do gold divided by oil, is pumping to new highs, even though gold is actually coming off a little bit. So you first have a period where gold is absolutely running and oil is chopping. and skidding a little bit, but occasionally has a spike. And then when we get into this kind of deflationary vibe, a little bit of a fear and whoa, looking over the edge of the cliff down there, it looks a long way down. You're getting a little bit of a coming back on gold, but you're getting an absolute spiller on oil. Now, it has rallied a little bit this morning, but I think it fell to 56. Back at around 59. This is the value of those trades, because one leg is always more than making you the money and covering any slippage on the other leg that you may be facing. And in actual fact, we've gone from 14 barrels, a single ounce of gold, that little coin, 14 barrels of oil it would buy you, to now you're heading through 60. Let's give you the update exactly. Let me have a look at the charts. I thought YouTube. Oh, well, we've got the share screen button. Oh, we have the share screen button. There, he's going to share his screen. Yay. Let's first make sure he hides everything he needs to hide before he starts sharing his screen. So entire screen. Let's go entire screen. Share the entire screen. Okay, here we go. We'll tunnel for a bit while you see the stream. That is gold-silver ratio. So I think this is the one. Here you go. So you can actually see, apart from a spell over there, this has been a pretty nice trade for you. So the call was inverted head and shoulder, doing exactly what it did in CV19. They haven't got too many more ways to play this, guys. You've actually had a very stable move up, heading all the way through here in a nice big old move. And you're at 50, let's be accurate, 55, heading for the 60, not yet the 60. So I spoke out of turn. I needed to check that. You traded as high as 57 barrels, and there's your 14.8 at the low. Now, at that point, oil was $129, and gold was back down at, could have been as low as 1,800, 1,900. So you can see how the game has flipped here. And what does it illustrate? It illustrates the economy wrecked. So as we've always framed oil in the following way for you guys. It's the Rockefeller tax on liquidity. When you have huge liquidity, we're all feeling so flush. Our houses were all going up in 2006, leading into 2007, and everyone was releasing, capital on the mortgage on account of valuation gone up, and buying a flash new car every 2 years, etc., and keeping up with the Joneses and all of that malarkey. What was in fact happening? Oil went up to 147. That's how they skim off you when you're feeling flush. They're pumping the liquidity, but they take some of that off you. So the transaction taxes, the putting the petrol in, the deliveries from Amazon, your one world order, internet purchasing store of choice. Yes, all of that goes up, and they pump plenty of inflation and costs in oil is the big skim. Now, when the exact corollary happens, when everyone's flush, they skim a lot of the fat out of you with the oil price back into their dirty, filthy little coffers. When they are forcing everything into a massive recession, what ends up happening is the oil drops phenomenally. The oil is almost like a stochastic indicator on the health of the consumer and liquidity. Because the consumer is normally healthy when there's quite a bit of liquidity around. So what you've actually seeing is the health of the consumer. If we just look at the oil price now and we leave that screen alone, and let's go, take me to the oil price. That's the USD JPY. That's also the USD. Where is it? WTI. Let's bring him up. We can't have too many yens. Too many yens in the Fox house. Let's get US oil. All of it, please. Thank you. Here we go. Bring it through. Wipe your face and remove all the drawings. There we go. So that's on a monthly. It's a little bit large. I will drop you down the time frame. Let me just move my box now. But you can see this absolute spiller. And this is essentially an inverted HVF structure that we've been calling and warning for quite some time. And that's why we've argued that it broke over there, which was some time ago, which is why we've been talking about it so long. And that there's many people get frustrated with us. I mean, people have said, yeah, you've been talking about this demand destroying event and, you're missing the new high in the MAG 7 and all of this stuff. since we started to see the oil getting ropey, it's a fear indicator. They didn't let it go straight away. You then had a lot of fake rallies. You see that inverted hammer up and then straight back down. This would probably qualify as a shooting star because it ends up a localized high up to the 80, back down, can't hold. Can't hold, can't hold. Then the red started to come through, and then you have the big red. And now we are in the month that we are in. We've only had 2 days. So this candle is virtually meaningless in the larger scale of things. So we can go out of the monthly and have a look at the weekly, because we have had a full week. We've only had 2 days of the month, but we have actually had a full week at Friday. And you can see that we tested the downside again with some vigor. So this is not a strong market. And what does it mean? Well, we assessed and stated that you've been in a recession for quite an extended period, and now you're turning the volume up on the pain, and actually it's going to become more so that way. Don't forget, this is oil's price performance in what has been a highly inflationary environment. Your currency is buying you less. All the currencies of the world were making new highs against gold except the dollar. All the currencies of the world were at new highs except the dollar when we were back here, when we called this break. And now the dollar's been the weakling, and you've got all-time highs of gold in dollar terms now, as well as all the other currencies. So the last, stalwart has fallen, and it was a pretty ugly event when Treasury rates spiked on the 10-year. So it's worth also reminding everybody of that event. We had an absolute spike. There's the oil chart I was looking for. Let's get the US 10-year rates then. Let's go to the US 10-year rates. This was a very, very worrisome moment for the US. Again, we predicted this. We said the day will come, they will have the UK experience where their rates will go up and their currency will go down. So we want to just show you the Dixie under that. So I'm going to split the chart. And while I'm doing that, I will come and look at your comments. Keep telling us where you're from, what you've been doing, and what you think the non-farm payrolls number is going to look like. So there's the government. We got the Korean one. Let's get the Dixie on there, shall we? Dixie do. So that's the dollar's relative performance. And what you'll notice is the box here, and I'll draw it. I'll go fat Koki. Yeah, give me a fat Koki, man. Fat Koki spike up in the 10-year rates, which is devaluation of debt. And at the same time as devaluation of debt, the benchmark that you're measuring it at, the dollar, devalued too. So that's a double deflation. You've been left, right, walking out the deflation. First, the debt market collapsed. The dollar was one of the strongest currencies. Then you had had a bit of softening of the dollar. The debt market kind of held its own and didn't go too much lower, but it's near the lows. Now you had a flurry of events on the tariff tantrum that has actually saw the debt devalue and the currency devalue simultaneously. And it is not reclaimed that. So you have not gone back down to the lower rates, which would have meant higher valuation of the debt. That since the tantrum, you have not gone all the way back down. You've eased a little bit, and the dollar has not gone back up. So you've held on to those losses, despite all the, the current news is, there's a slight easing in the tensions between America and, the Sino relationships, which is a fancy way of saying China. But in actual fact, this is a dead cat bounce rally in essence until the next wave down. So you've got, a rising wedge there, and you've got a falling wedge here. That's how it looks to me. And in fact, we were talking with the community about the falling wedge here and saying, actually, after maybe a little dip one more time, we will have 3 impulses in this. Once, twice, you get a third and a little dip lower. That could be today on the payrolls number. And then pop goes a weasel, you break out, return, move, and up. Yields go up again. Now you should see, again, the currency go up, but for the first time ever in known history to me, you had increase in the base. This is the stalwart of debt issuance, guys, 10-year US Treasury. And that's where I say the reserve asset changed, because now I've got all these two up here and I've done my Picasso of a drawing for you all to appreciate. I'm going to go and be assume your eyesight is a whole bunch better than mine. I'm going to go and put on the third part of this. And this is why we said short America, long gold. Let's pull this through for you. So again, let's re-highlight what happened. So you now have three charts you're looking at. Reminder, rate spike, dollar dump. Yep. What happened when the rate spiked? In other words, people were selling off the 10-year. So I can, instead of putting the 10-year rates, let's change that just to the US 10. That's the valuation, so people aren't confused by this. There you go. Dip down in value, dip down in dollar value. Who got the money? Who got the money when the tariff tantrum was at its peak? Who got the money? Who got the money? So let's just draw those boxes again, because they've slipped slightly out of kilter. So there's the high valuation of the 10-year into that sell-off. There's the beginning of the skid of the dollar into that low. And here's the beginning of the pump in gold. Who got the money? Put your hands up at the back of the classroom. If you know what to tell the bald teacher who got the money, please tell him. Yes, you at the back there. Who got the money? That's right. Gold got the money. Gold got the money. Let's just be clear on that. For the first time in a real fear situation, the T-bill was not seen as a safe haven. Gold was. Both the currency and the debt went down. Now, that could have been Americans shorting their own assets and moving the money offshore. That could have been Japanese, Chinese, anyone. Everyone wants to point the blame and say, someone attacked America. No. Get out of that framing. No one attacked America. America put itself in such a precarious position through its debt situation on the basis of a debt-based collapse that we called in September of 2020 and said the game has changed. The debt markets are no longer got your back. And now you're starting to feel what that really means. And you say, somebody attacked us. Wrong. Nobody needs to attack you. People just wanting to look after their own bags have led to an attack. And can I say, Japanese have hardly sold any. They still got all that they have, nearly 1.1 trillion. The Chinese are still on 850 billion. This wasn't big. And this was the point I made inside with an appearance I had recently. And it is fascinating. So I'm going to get rid of those three because it's probably very difficult for you to see anything. But I want to just highlight here what happens. We go back to the rates, which means up means debt valuation down. The point I was making during this period is people think these bond markets, they are huge, by the way. Let's go and see if I can find an X profile that can... That's, by the way, our newsletter. Don't forget, right now, you can join our newsletter. There's a free version and there's a slight premium where you'll get some crazy gas benefits, which will be Ask Me Anything sessions and a bunch of other things. You can join just by registering for our mini series on HVF. You'll be included and get an opt-in for our newsletter. That was the one before, the one that we've now released. This is the stock meltup. Are we due to get a stock? There's so many guys talking about a stock meltup. We are going to be covering this in our live trading day, guys, in our live trading day. Look for the link in the chat. Let's have a look at the chats. Who's saying what? There's a bit of tunneling going on, so I'll stop the sharing for a second. There's a lot of people talking to you. And I mean, you should list them all and name them, and you should punish me and name me for being the dip guy if we go into a melt up. Okay, because this is an important thing not to get wrong, in my opinion. And I know too many people that you would call influencers. I'm not sure I like that label. Please don't consider me an influencer. Influence yourself. Listen, formulate opinions, take from other people's opinions, weigh up the evidence, and go with your own take, your own best take from everything you hear. But let me just say that. So please don't ever call me an influencer. And don't be influenced by me. Just listen to facts. That's all. Play principle and facts. That's all you should do. But there are a lot of people that are in this new category of influencer, for which I don't consider myself, that are talking about meltups on the stock market, and then collapse. And I think they've got it wrong. So I'm sticking my reputation and I'm taking a big gamble here. And I'm calling even the evidence that they put forward as flimsy for that. I'm saying, first wave of collapse, rally now, you're going probably another much larger next wave of collapse, and you could have essentially a 5 wave. It could be 3 waves, down, rally, down. But actually, if you're asking me my best guess, it's down, rally, much bigger down. Like Elliott wave, it goes 61.8% larger than the first leg. That's where you're going to go, oh my God, real crisis. And it'll be climate, power grid off, bank hack, blah, 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 blah. Funny how things are going in Europe. They can't seem to keep the lights on. It's so difficult. The hamster's running on the wheel and he's not generating enough. Must flog the hamster more. Faster, hamster, faster. The lights are going off. Yeah, green. Global dimming. We must dim. Put out the solar panels. Dim the sun. It's very, it's like a clown show. It's a World Economic Forum clown show designed to orchestrate a major collapse. And they're probably not going to have the power. And then you won't be able to go to the banks. The banks can't give you your money. It's all digital. It's all in the power. But buy Bitcoin. Don't have gold. Don't. You have to hold that. You physically hold that thing. Anyway, all of that stuff's going to be going down. And anyway, live trading day today, we're going to be talking more about all of exactly this. And there's going to be a second leg. That's our take. People that are thinking NASDAQ new high, MAG 7, we think are deluded. Because here's how new highs work. A whole bunch of new money needs to come in and chase the stack. All the insiders have sold. You're going for record bankruptcies in America. There's a deep concern about investing further in America from foreigners. In fact, there's been an argument put forward that they're divesting. The big players inside America who are American are short US debt and are actually shorting America. So the short America trade is to be something short both the debt, potentially short the stock market, and buying gold. If you buy gold, you're shorting America. You are dumping dollars for the real stuff, this color, So I'm afraid it is a short America trade. And that's not attacking my American friends who are great people. It's the malfeasance that has gone on. And I need to do a diagram, by the way, at some point. So maybe I should do a share screen just on one of the charts, on a blank chart even. But the real thing is, this is the world as it works in my eye. This is the template I use. New York City, are you already up? Man, you're an early bird. Good man. Debt is the money of slaves. Indeed, sir. Indeed. Well said, sir. Suits you, sir. Correct, sir. Keep thinking that way. And you also know then what isn't the money of slaves. So if I just go and point out, and by the way, so there's a lot of people that are a little bit irritated with us about the gold-silver ratio. So I love silver. I own silver. And I want silver to win. Okay, now that we've said that, if we are going into a next leg of collapse, you are a gold-silver ratio bull. People saw how silver got spanked and they go, oh, there they go again, the big dumping silver. It's a market that can be bullied, guys. It's a market that can be bullied. It's a small market. It can be bullied by the derivative monsters anytime they want. A lot of people saw it and were really angry. There was this period of sell-off here. You got a bit of a hammer, though, after it. But I'm on the daily now. Let's just zoom and reframe a bit more correctly. Get rid of that box for now. But there was an absolute spiller, and everybody was showing that. Now, it seems to have rallied up a bit better since then. But the point of all this, if we go into shock sell-off mode, silver will shock sell off in a percentage terms as a higher beta, smaller, more easily bullied market, more. That means the gold-silver ratio goes up. So the melt-up guys are actually the ones, if you think there's a melt-up, everyone who's saying you should be overweighting silver now, I think you're a tiny bit early. The gold-silver ratio can go higher. This is what gold's doing, by the way. We got an inverted, it made its second interim, hasn't made target. I'd love for this pattern to fail, but it looks like on a bigger time frame, this is 2 hours. If we go up to 4 hours, it looks like we're probably going to set up a falling wedge. And this is it's going to set up your next buying opportunity. Something like this. And it's funny because we've got a falling wedge on the rates, where we expect the rates to go up. We've got a falling wedge on gold, 3 impulse. Bonanza, who remembers Bonanza? Geez, give your age away. Michael Landon, he was the handsome one. And then there was the fat guy. Who was the fat guy? Who's old enough to remember who was the fat guy? Who they always used to joke was killing his horse. The Iron Horse, it was called. It was called the Iron Horse. Who was the fat guy? I think they're all dead, bless their souls now. But that's a falling wedge on gold that will likely see you buy out. So actually, it's getting to a great. I would say this 3,183 will be a 3,170 will be a great pickup point. Don't forget it touched 3.5 up top here on gold. So we're going to be covering this and a whole bunch more with you beautiful people. And if you are expecting a further sell-off, you are actually expecting a higher gold-silver ratio. That's silver. And the gold-silver ratio is here. You know, you had this plane. That's not a bad, hard breakout out of that channel. If it was a real bear flag, it sort of smashed it out of there. You know, that should be silver going up strongly or gold going down. It's not happening. There's this level. And who put that level there? You get it. You got it. The sniper boys know the 100 level is a key level of significance. You spent most of your time diving, weaving in and around this level. And you had one little spike move up that you got rejected from. We think you're going to trade higher than this. And it's going to be part of a much bigger escalation. That third wave, you're in the rally mode now, that third wave to the downside. If you think the S&P and the NASDAQ is about to make new highs, I ask you, where is the money coming from? Where is the money coming from? You're at 4%, 4.2% interest rates. QE only starts to become a thing once you've cut rates right down to 1. Who's going to buy the bonds? What has the market shown you the money runs to in fear now? You had a tariff tantrum. Where did it go? What did I tell you? The reserve asset of debt is no flipping more since the day we called the turn in August 2020, before it had even made a head and shoulder, on the very top head on an inverted HVF that smashed it all the way down to the neckline, gave it a rally for a right shoulder, and then smashed it all the way down to the head and shoulder. We were very early and on time and on point, virtually called the top on the TLT. And that is the biggest call we've ever made. And we say it's bigger than oil to single digits. It's bigger than anything else we've ever said because it's the end of the system. It is the reset call. That right there was the reset call. And you're now being shown by me that in a tariff tantrum, money no longer rushes into the debt market. It rushes into gold. They don't trust it anymore. Something's changed. Yes, it changed in 2020 when we told you it changed. You see how that works? It's changed. There's too much of it about, friends. There's too much of it about. You know, we got it right on that one. And it's important to get the macro right. You can get a lot of details wrong, but it's important to get the macro right. And we're pretty good on the macro. The big time frames, we're there or thereabouts. 1 a.m. Los Angeles time. Stacy, you are a super gal, man. Well done you for checking in. We're already on the next day. It's time you got your beauty sleep. As pretty as you are, you still need it. Okay, Bonanza was great. Yeah, was watching it every day after work. Oh my God, you were working when you're watching Bonanza. How old are you? 147? I was a little snot face sitting there when I was watching Bonanza. Or maybe it was a rerun. Maybe I shouldn't be calling you old as Methuselah. Treasuries, it's over. Yeah. Love from Scotland, the ranting Scotsman. Keep ranting, Scotsman. There's plenty to rant about. You're right. Excuse me, your windows are mucky. Good morning from London. Well, if you live in London, you're going to be in the mud and have mucky windows, aren't you? But yes, thank you for the wishes. Non-printable limited edition pink diamonds work too. I'm not sure what to make of that, Cheryl. Pink diamonds? Diamonds are a lady's best friend, but not your portfolio's best friend. Gold, gold, gold right now, reserve asset. And so there was a tweet, actually. Let's go find that, and I'll show you that. Remember, you want to have this session with us. We're going to keep it fun. We're going to keep it enjoyable. We're going to analyze the world with dark humor. Who would that be? Fancy the Liverpool Red Men winning that championship. What's not to like about that? Sorry, ladies. I know sport's not your bag. It's distraction. I know. Okay, so here you go. US treasuries are a much larger market than other asset havens. That gets to change by devaluation. In other words, the reserve asset is now this guy, and a little bit that might go into maybe Swiss bonds. But let me tell you, debt is going to go out of favor big time. So just changing flavor of debt is not going to be the game. Gold, gold, gold. This guy is going to deflate right down. And this guy is going to be going the other way. And by the way, it's already started happening. And when they say a much larger market, what they don't tell you is how quickly it falls on very small volume. Final thought I'm going to leave you when you see that diagram and understand, and that's UK gilt. So these are all other debt instruments. So they're only really comparing gold to a whole host of countries' debt instruments. Well, if you have to be run a debt fund and you can't be in anything else, okay, be my guest, run into the Swiss government bonds. But let me tell you, 28.59 trillion, let's not be fooled by that, trillion, can't fit into the Swiss market sitting at 0.09 trillion. You can't squeeze that baby in there, sorry. So it's not happening. What is the thing I wanted to show you? The thing I was going to show you is the degree for these markets to gap. Yes, you heard me. The Treasury markets gap. So this is a daily time frame, gapping big time. So during tariff tantrum, the close was there. The open was there. Hold on a minute. So that's the rates jumping with virtually zero trade. But this is a trillions big by valuation. This is the illusion of market cap. And that yet there's no volume. You know, this is something Richard Hart understood on crypto. You can get a market cap very high, but if you hold 95% of the tokens and only 5% is actively being traded, and it's by small people, and then Mr. Whale of 95% just runs the stack and buys his own tokens up on the remaining 5% and buys 1% of it in one big smash the stack bid, he can knock that price 30% up. Now he's 30% richer on the rest of the 95%. But good luck trying to sell that 95% into the market. These are gaps. It closed there and opened there. That is a no trade gap when you jump like that. It's a no trade gap. So the notion that there's this deep, it's a big market. The notion that you can sell 500 billion of a morning of US treasuries without deeply affecting that market is absolutely wrong. They're keeping that valuation up there because they got to. That's a whole Ponzi scheme is based off that valuation. But if you try dump sell, they'll say, whoa, what are you doing? Stop, don't do that. We'll find a placement for you, Leave it with us. Why don't you keep some? We're going to be doing this. The rates are going to fall. It's going to go up in value. They're going to try to stop you from selling. They're going to fill you with any BS story. And then they're going to say, well, we're going to need to work that order over, like when Germany asked for their gold back. How's 7 years sound? I want to sell my 500 billion in treasuries. China, I want to sell my 850 billion in treasuries. Would 2055 be okay for you? If we really pushed it, maybe 2053. That's like, sell $1 a day, Guys, they're maintaining essentially a token Ponzi where the alleged valuation of owning 95%, all the bond funds, they all sit there. Just collect your yield. Don't ever dump the market. That's what happened to the UK when they couldn't, the pension, it couldn't pay its pensioners and it tried to sell. There was no bid. There was no meaningful bid. The government had to intervene and provide liquidity. We shall provide liquidity. What does that mean? Further dilution for you, monetization by the toxic bank. That's what it means. Okay, all right. So we're going to talk about this and a whole bunch more as the main number comes in today with yours truly, the market sniper, in his fancy chair, sitting here in the red room. Sounds quite communistic, doesn't it? Far, far away in the Eastern Europe, ex-Soviet bloc. That's right, where we've been helping our community members. In fact, if you come on, I might be running in the break, literally, to go collect my residency. Things we are doing for community members that we met right here last night, had lunch with, couples, young folk, medium career folk, older folk, a man and his dog, a whole bunch of people, and others that weren't able to make it, that have all working through the process of securing, yes, that's right, securing residency, tax residency, bank accounts with an associated crypto account that will know who each other are, for which you can onboard and offboard, big problem for so many people, without query and without any dramas. Zero capital gains tax commitment for people that are foreign, on their foreign assets. So Georgia will not ask you. You are deemed of having paid your capital gains at 0%. On your crypto, on your stock trading portfolio, on your gold purchasing, etc., etc. Incredibly useful, and allows you to wave goodbye to your original slave master, where you can go, I am now resident here. I am no longer here, no longer need to report your banking everyday mechanics to the United Kingdom, Germany, etc., etc. And you can be fully resident here. And there's a number of ways you can achieve that and renew it on an ongoing basis, and even get it to a point where you can have it for a lifetime. How about that? And the other key point that I make, that was, we had a chat, and we're going to be sharing this to our community, this video, internally with the other community members talking. They're all so happy that they've done it. They're all saying how easy it is to work through the Georgian government. By the way, it's not a bureaucracy. Here's what Georgia did. Hey, we're a small country. We really could do with foreigners and foreign capital. How do we build a model that is super efficient, that people can be in and out like a click of a bee and still have to still get all their paperwork done? And they've gone about this, that actually, because I consider government the fulcrum of inefficiency. This, in this country, completely different. Half an hour, I'm in and out there, and I've got everything available. Bank statements, they have banks in the area in the same building, photos, anyway, I didn't mean to turn this into this kind of discussion. I'm just explaining why I'm in Georgia. You could see me get my renewal of my Georgia residency. Super, super useful. And by the way, you don't have to come and be here for 6 months. You can. It's a nice place. It's turning spring. It's all green. It's beautiful, in fact. But I mean, you can actually just show up for your application, and with our partners, go through that process. Literally, you can be stupid. You can be hungover and just deliver your passport and sign where you're told. You'll be walked through it with a combination of our partners. So anyway, I was on this chart and I got sidetracked. Gaps. Good luck trying to get out of the Treasury markets for gold. They have to work their way out slowly, and it is a losing trade. And it isn't, it might be big, that doesn't mean it's liquid. Do you understand the difference? It could have a super high value market cap. That doesn't mean it's liquid. It doesn't mean, if it's a 23 trillion market, as that tweet was telling you, why the hell can't you sell $1 trillion a day? Good luck. Good luck if you ever tried to do that. Okay, let's have a look at some of your comments before I finish up. Native American, he always forgets to share the screen. Did I forget to share the screen? Such a fool. Share the screen. Share the screen. So let's go back. So we were just looking at the gaps on the market. Let me just recap that, because I was stupid. Sorry, this is new for me. I'm kind of stupid that way. I apologize. Forgive me. US 10-year. There's where the gaps. Let's do that again. Here were the gaps on the yield. You can see how they jumped. That's what I was showing you. Sorry, Native American. and everybody else. That's what I'm talking about. You don't get to do it. And here's your falling wedge structure coming again. So yes, I would think rates down one more time. Everybody gets, oh, you see, it's all over. Trump solved it. He was just testing to see how far the Chinese go. That's what I see coming. Now, rates up could actually mean dollar down. It could mean dollar up. It could mean either. What we do know is it's no longer a guarantee of dollar up. We've also got a falling wedge on gold. If gold is going up, it probably means dollar down because you've already seen it once now. And the reserve asset isn't trusted anymore. So that's what I was trying to say. Hopefully I've made up for being a fool. I wanted to check your comments, and now I realize I was doing it. There you go. So let's stop the share. To stop the tunneling. Dollar strength on the back of the spike. So ask a fair question about the Korean won. So for now, actually, while dollar is being weak, we need to get to that, probably that deep collapse state where you could potentially get that spike and some Korean specific stuff. So USD Korean won is getting pushed away as a trade in terms of timing, and you're actually getting gold. Gold is still the story, this pullback, and then we go back strong again. I moved to Russia. I'm definitely in the right place. You're definitely better than. So here's the thing. If you live in the Europe or a US, you say, well, I've got a great lifestyle. We've got much better malls. I buy a Balenciaga. I look fashionable. I've got a flash car, all of these things, etc., etc. That quality of lifestyle is at peak and is going to turn down, especially as you deleverage. Access to credit means asset prices go down, down, down. You should be high water marking, taking your profits on property, cars, anything that requires finance in it. And you should be stonewalling, running into gold. That's the fact. And places like Georgia, places that maybe you thought was not as nice as US or living in Paris or, the first world, as we would call it, are actually on a collapse. And you look at the trajectory of the UK and Europe, it's a nose-diving 747. You may be at a high altitude for now, but you're into the base of that mountain. If you carry on in the current trajectory with the current angle of attack, chasing all the millionaires, there are actually, and I think this is by design. Remember, we said the Middle East is going to become populated, and Singapore. And we've spoken of this many times. And literally, everyone from the UK appears to be largely going to Dubai. Now, I don't like that place, personally. Sand castles built in the deserts and all of that. But when it comes to taxation and security, no one's going to be stealing your car, holding a gun to your head for your Miele watch or whatever else these crazy Instagram influencers are wearing. You will live a lot safer in terms of day-to-day stuff, and you'll pay a lot less tax, but you'll also have the cost of living up about here. There's places where you can go with a lower cost of living. Sometimes it's not about just mega bucks and paying Monaco rates on everything. Sometimes it's about getting your cost of living lower, accepting a few imperfections, and having a great lifestyle, and maximizing your spread between what you earn and how much it costs to have an evil listen. There's something value to frugality. There's actually a value to a 2015 4x4, which is what I have. I don't have to have. I want a diesel engine. I don't want a battery. I don't want any of their new tat. And I don't feel I'm going without by not having, a new Range Rover or a new Land Rover Discovery or a new brand new Prada or Land Cruiser or whatever the case may be, if you're a 4x4s guy, or having the new slightly faster that'll do 2.6 seconds, or the battery car from flipping Tesla. It's all hype. It's all prisons. It's all iPod track and trace. It's get your own eggs served to you easy over and a frazzled rectum. I don't need that stuff. I don't support that science. I don't support what it does to you physically and health-wise. I don't support the people that push that. It's a control structure car. I want an old analog, the old Defenders. I mean, those rickety old ones that have been fixed up. That someone who's a good mechanic can fix, and there are no black boxes, there are no chips, there are no nothing. And I don't care if people think I'm a homeless person when I'm dressed and jumping into my old thing. It's actually awesome. It's not the time to be showing wealth. It's not the time, because they're going to create a culture of envy. Envy is a terrible thing. The quality of your lifestyle minus how much you envy other people is how happy you are. I actually don't envy Elon Musk. I'd hate to be Elon Musk, apart from the unleashed autism that seems to surround him. I'd hate to be someone pushing all of those agendas. I'd hate to be Bill Gates. I'd hate to be Tony Blair being pushed out by his handlers because they've got blackmail tapes on him for something. I'd hate to be any of these people. I'm happy centered in trying to understand what's the best part of the truth. You want to catch up with us on a live, the link is shared. Go and grab it. Be there. Let's just check. Have we got someone? I'm hoping Greg is out there sharing the link. I haven't seen it. There we go. Yeah, join our live trading day. You might have to scroll a little bit back. It'll get posted again. But living a happy, nature-based, ocean-based, comfortable. I don't need 16 bedrooms. I hate the idea of being in such a house where it's so freaking large. And it costs us arm and a leg. It's just inefficient. Do you need a basketball court in your home and 16 bedrooms and 27 bathrooms? I mean, there's a much simpler existence that's incredibly happy that we can all have. And our goal, simply put, for me and everybody who's on the channel, whether you join our services or not, is to help you maximize your wealth, help preserve that. Because the great scavenge mode of the governments are coming. Look in the eyes. I'm looking straight at the camera. The scavenge mode. Hear my story. The longer you leave your country, the more they're going to be ripping a part of you out till they're ripping your entire face off. You're talking about exit tax, capital gains tax. You've already got this in California. If you leave the Californian state, they want to reserve the right to claim money for you for 5 years after you leave. This is a bankrupt state inside a bankrupt country, inside a culture that has been taught, have it today, pay for it over the next 10 years. You have a mortgage for a car with a balloon payment. This is the great collapse. How's the future looking and the trend? China nation. To understand the principles of wealth here, guys. I live within my means. The more I make, the bigger the spread, the more goes into gold. That's China, and that's me right now. Actually, I'm Chinese. I'm yellow man. I'm sitting in the yellow chair. I'm Chinese. How does it go for the American guy that is living like he's on $250,000 but earns 85,000? How's it going for him? Where you spend much more than you produce, you consume much more than you produce, and that massive spread is going on a pile of IOUs that the liquidity is draining away from, and you're telling everybody it's a real asset. Don't worry, we'll pay at least interest on what we owe you. We can't afford to pay you in full. Who's at the peak and going down, and who's going to do better? And I don't want to live in China, but actually, they're going to have a better existence out of it. They're going to come out of this stronger, even though they will be affected by a big consumer collapsing in on itself. But you don't want to be in the downdraft of the ex-empire. Ask Britain about the austerity era, and that was a handover, or a friendly handover to the US. We're going to be talking about this and more on the live trading day. We will cover an hour and a half of traditional markets, looking for trades, waiting for the data to come in. We will have a half-hour break, and then I will probably rush off and get my Georgia card. I'll come and show you my ugly face, and then I will put crypto on, and we will cover Bitcoin, and an upside HVF did perform on Bitcoin, and crypto hasn't been as bad as the stocks. It's sitting in between TradFi and gold. How's it going to turn out? We'll be looking into that and the other tokens for a full hour and a half as well later on today. So love you and leave you. Keep all those things in mind. Link is a bro. Go get the mini series. If you don't want to join us for live trading day, $197. That's what you're going to be asked for 3 hours. You will have the recording for a full month to review and to watch. And if you decide to be flush, you will get 3 payrolls for the price of 2 and 3 months of access to watch all 3 of them for 2 times the 197. So you could also do that if you're feeling flush and you want triple sniper. 3 is a magic number. Okay, so what will you get from that? An understanding of where the world's going, what's likely to happen, and some of the best trades in the short and medium term, and some of the key macro trades that you could be investing in. And when I say trades, we're not sitting at 9 screens, ding, 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 casino. No. Medium, long term. Anything below 4 hours is just a moot point of interest. It's only interesting if it's inside something of a much bigger time frame. We're not turning you into screen jockeys, okay? We just want to help you get wealth so that while you're walking around doing the other things you do, generating your income, there's something moving in your favor more often than not on a high reward, very tight risk basis. Losses are taken quickly, profits run for long and hard. Okay, till next time, I catch you later. I salute you all. Look after yourselves. Thanks for checking in with us today. 472 and almost half of you have given us likes. We're hitting 193 likes. We truly appreciate it. Share it to your friends and family, and we look forward to catching up on the number coming in today for the United States and seeing how it transpires for the movement on the dollar, the movement on the debt markets, what might happen on gold and crypto too. Bye for now.